everyone. Today is November 25th, 2013. Well, today I want to try and make sure you understand what's going on. We have the major commercial banks are telling the Fed, or warning the Fed, they're going to have to start charging depositors a fee in order to have money. So let us hold your money for you, and you can go ahead and pay us to do it. Long gone are the days of double-digit returns on CDs and free toasters and free radios. Those days are long gone, everyone. I warned you about this last summer when France and Denmark were both going to negative interest rate policies on bonds. I'll give you a clip of that here. Hello, everybody. Thank you for joining me today on the Moneybag 73 channel. Today is July 9th, 2012. Well, it didn't take long for another country to open up their Alice in Wonderland textbook of economics and to jump to negative interest rates. Today we had, for the first time, the French government issues negative 0.005% bonds, 3-month bonds, issued today, 6 billion euros worth. So this is what's happening. This is where I believe we're headed. We're going to see more and more of this around the world. When you have a debt-based monetary system and it's getting to the point where, you know, it's speeding up the amount of debt, and you just have to keep piling on the debt to keep it from collapsing on itself. So encouraging more people to go into debt, we're moving into negative interest rates. Rather than having to print up so much money, we'll move into negative interest rates. There's still going to be a lot of money printing. There has to be money printing. Everything's going to come down if they don't continue to print money. Today at the auction was to loan the French government $1,000, you could pay $5, or to loan them $10,000, you could pay $50. So get ready, everybody, to be paying money to have your money in a bank or to loan it to a government to buy some bonds. I mean, this is, savers are being totally punished, and borrowers are being rewarded by taking on more debt. So this is the future. Here we are. It's, you know, it's just totally crazy. It's complicated what's going on, but not really. If you look at these few graphs I'm going to show you, the monetary base has been taken from 800 billion up to around 3.4, 3.5 trillion. And a lot of people expected a lot of higher prices as a result of all this inflation. But I'm going to show you why we haven't had that, and why the banks are warning that we're going to have to start paying to have deposits at the commercial banks like JP Morgan Chase, Bank of America, and all the major banks. So let's look at the monetary base graph real quick here. Okay, so a month after Lehman collapsed, the Fed started paying interest to the commercial banks to hold reserves at the Fed. There was only like $2 billion in reserves prior to the 2008 crisis, and now there's, I believe, 2.3 trillion. So they paid the banks, basically, because they didn't offer interest on those reserves prior to 2008. So they started offering interest on the reserves, and they've created this huge time bomb, which, if that starts getting lent out and multiplied through fractional reserve banking, will cause prices to go through the roof. And the Fed knows this. They know that they've created this time bomb. Supersonic Yellen is ready to take this and run with it. And so that's why we're going to have negative interest rates. They know they have to taper, but they already saw the bloodbath that happened when they tried to taper, or they tried announcing it. When they announced that they might do it, then they saw what happened. So I don't see they're going to taper unless they taper and start to force the banks to start making loans. Now, they want to have a situation where they're stealing at least 2% of your wealth through a hidden tax called inflation. That's the goal. And it's not happening. So they've been creating all this money, buying bonds and mortgage-backed securities. They've been supporting the banks and keeping them afloat because a lot of the banks are insolvent. and so they're keeping the banking system together, and they're holding down interest rates. So if they're not going to be buying as many bonds, then they're going to have to force the banks to start lending. So I want to show you real quick here the reserves that are being held. I'll show you the graph here. So they've created this situation where they need to start dealing with this time bomb. And that's what we're going to have. So, you know, this is just Alice in Wonderland economics, everybody. It's a horrible situation that we're in. Also want to mention the ECB is tossing around the idea of negative interest rates. This is the future. The tools that the Fed has is to either print money or lower interest rates. That's the only way that they can artificially stimulate the economy. And what you get from that is a misallocation of assets and resources. That's where you get all these bubbles. I mean, to me, the bond market and the stock market are clear bubbles, as well as art. And, you know, we're having diamonds sell at all-time highs. We're having paintings go for all-time highs. Bitcoins, to me, is an obvious bubble. There's no value there at all. It's just you think that you're going to be able to sell it to the next guy. At least there's intrinsic value in precious metals. That's why, personally, I prefer to hold real money for thousands of years. That's how I'm going to weather this storm that we're heading into. But the whole system is designed to collapse at some point. And we're seeing the whole system unravel now. And you can either prepare or you can just live in denial. I mean, that's what a lot of people plan to do. They don't know enough because it's kind of complicated, so they just figure, oh, well, the people that got us into this mess, so, you know, they'll figure out a way to get us out. I mean, I don't hear this talked about. I don't hear the $85 billion a month talked about much when I do happen to watch mainstream media, which I don't really watch television, but, you know, I do see clips of shows that are on television, and I don't really see it mentioned. I don't see any talk about the $85 billion a month. I don't see talk about $2.3 trillion in excess bank reserves held at the Fed. There's no way to really know what's really happening. You're just told that, you know, there's stimulus and, you know, they're going to taper, blah blah blah. It's all a smoke screen. So nobody really understands what's going on. But anyhow, I thought that helped. I hope that helps a little bit. I thought I'd try and explain it